Good morning, guys. Good morning. In the next 2.5 hours session, what are we going to do in the next 2.5 hours? Simple. We're going to revise all the accounting standards of Group 1 from AS1 to AS16. All the concepts we're going to revise easily in 2.5 hours. Time is sufficient. And additionally, we're also going to do November 23 RTP questions of all accounting standards of Group 1. If time permits, we will keep doing more RTP questions of accounting standards. So we will start, guys. I'm not going to start with AS1 and bore you guys. We're going to come in reverse in order of importance. So I want you all to put your full attention for next 2.5 hours, revise all the AS. We're going to start off with AS16, then AS12, AS13, 12, 11, 10. We're going to come in reverse, guys. Fine, okay. Now, so I hope everybody, it's clear. We're going to start off with AS16. Now, simple. What does AS16 talk about? AS16 talks about borrowing cost. Borrowing cost means the interest that we incur, the interest that you incur on borrowings. It's not only interest, it's interest plus a few other things like premium, discount, other things. But for the time being, keep it as interest in your mind. Interest on borrowing cost can be capitalized. So simple. Exam viewpoint. We're going to keep it fully exam viewpoint. So what should I do in exam? Step 1. Check if it is a borrowing cost. Check if something is the borrowing cost. Yes, it is a borrowing cost. Check next. What is borrowing cost? Interest that I incur on a loan that is taken. Fine. Next I will check, is this borrowing cost incurred on a qualifying asset? Whether it's incurred on a qualifying asset. If that also the answer is yes, I will check, is there any construction, acquisition or production of a qualifying asset? If everything is yes, I will proceed and capitalize my interest. So simple, guys. This chapter is about me incurring interest, and this interest, will I capitalize or will I debit to P&L? Quickly, let me focus on one definition over here which finishes the standard called qualifying asset. What is qualifying asset? We have to memorize this. Qualifying asset means an asset which necessarily takes substantial period of time to get ready for intended use or sale. Without a doubt, you have to by heart this definition for exam. Write this in every answer that comes, whether they are going to ask you to capitalize or not. This will be the justification. Quickly to finish the key points over here. What do you mean by substantial period of time? Usually considered as 12 months, but it can be more, it can be less if you can give a reasonable justification for that. That's it, as simple as that. Now, if I'm going to construct a house in 3 years, if you're going to construct the same house in 5 years, it's not a qualifying asset. Because if I'm going to construct in 3 hours, you're also going to construct in 3 years, then it's same. To give a simple example, how long do we brush our teeth? We brush in a few minutes or maximum 5 minutes. Somebody is coming and telling, I'm going to brush my teeth for 30 minutes. Then you cannot say it's normal. So the word is necessary. Qualifying asset means an asset which necessarily means for anybody doing that work, it takes substantial period of time to get ready for intended use or sale. I constructed a house. The house is not being used. I constructed a house and the house is not being used. Still the asset is done because it's ready for intended use. To give another example, how long do we all have lunch? 30 minutes, 1 hour or maximum 1.5 hours. Somebody is having lunch for 3 hours. Is it a qualifying asset? No. As per definition, he will fail because qualifying asset means an asset. To build an asset which necessarily for anybody doing that work, it takes substantial period, 12 months, normally otherwise high or low, of time to get ready for intended use. For what purpose I am going to use it, or sale. What is intended use? For my own use, or sale means, let's take a construction company which is building apartments, Casa Grande, building apartments to sell it. So for them, the apartment they are building, which is taking them 2 to 3 years to sell, also becomes qualifying asset. To give you a simple timeline, guys, let's assume the first line is the loan. Let's assume the second line is the period of construction. Okay. Now we have to find one common part where both will overlap, and that part alone I will capitalize. Interest will be earned in this entire period, or interest can be earned less or more also in this period, doesn't matter. We will capitalize all the interest that is in this period which overlaps with my asset during the period of qualifying asset. Sir, how can asset have a time before or a time later? Very much, once the asset is ready for use or sale, after this I will not capitalize. The word ready for use is important. It is not 100, asset is 100% ready. Nobody can be 100% ready. So the word they say is, once the asset is substantially ready. If you're moving to a new house, one doorknob is missing, it's okay. Once the asset is substantially ready for use. Coming back on this side, when can I start is a very, very important question. When I can start? I bought a land. The land is idle. Can I start capitalization? No. If the land is idle, you can't start. 3 important things. There has to be activity on the asset. Borrowing cost should have been incurred. There has to be some activity on the asset. Physical, technical, admin, some activity should be there. Borrowing cost also should have been incurred on the asset. And what activity? Some construction also should have started. If all 3 are satisfied only, you can start capitalization. So simple. The standard says, in this time gap where the loan and asset overlaps, we will capitalize. Now, let's take a scenario where loan is 200 at 10% interest. Qualifying asset constructed also is 200. Assuming both are exactly for 12 months, then how much interest I will capitalize? 200 into 10%, 20. But a question like this will come only in our dreams. In reality, what will come for you in exam, guys? Loan might be 300. The qualifying asset can be 370, 300, like how you expect it to exactly match. Sometimes it can come, or 260. And the loan will have, let's say, 10% interest. Interest is 30. Now, qualifying asset, if it's more, not an issue. Because that means entire loan is used. And this 370 will have breakup. They will tell, let's say, 200 is for plant and machinery, 100 is for working capital, 70 is for advance for purchase of truck. Advance for purchase of truck. They will give like this. No problem. This 30, which was our interest we computed, proportionately in the ratio of 200, 170, I will split. That's it. Sum is over. This is the case where the qualifying asset is more than the loan. Okay. Next case, if it's same, no problem. If it's same also, I can still do proportionately. I can still do proportionately only when it's less. If it's less, let's say 200, 30, 30. You can still do it proportionately, but ensure the maximum interest that you are going to capitalize should not exceed the interest on 260. So what is 10% of 260? 26. So the amount of interest you are going to capitalize over here should not exceed 26. Sometimes students write 28 when the amount of loan used for qualifying asset is only 260. Are you following, guys? Next important thing over here, interest will be 30. Sometimes student will write 34 to be capitalized. These are things you have to check in a solution. The amount I am going to capitalize as interest, how can it exceed the base interest itself? I am not discussing over here, teaching you concepts from scratch, guys. Everybody knows AS. I am only revising quickly few things where you will make mistakes in exam. That is what is important. Next mistake area or next confusing area for students. Sir, plant and machinery or building means I will take as qualifying asset, sir. Working capital means not a qualifying asset. This advance comes means I am getting confused in exam. Some sums advance for purchase of truck they are taking as qualifying, some not qualifying. Very simple, guys. When they give the word advance for purchase of, sometimes it will come truck, sometimes it will come additional assets. If you look at this in the study mat, advance for purchase of truck, they give it as not a qualifying asset. Advance for purchase of additional assets, they will give it as qualifying asset. We get confused. The same answer in ICAI itself has an assumption below. You can take either and give an assumption below if it is substantial period of time qualifying asset. If not, it's not qualifying asset. If the date is not clear in the question. If the date and period is given, sometimes they will tell advance for truck was delivered immediately or installed on the same day, ready to use on the same day, then not a qualifying asset. Generally, truck, why it's not a qualifying asset means when you pay advance for truck, how long delivery will take? 2-3 months. So not qualifying asset. Advance for additional assets, we don't know what assets, we don't know how long. So we are taking assumption as qualifying asset. Whenever it's confusing, take the assumption but give reasonable justification. These are all the top common areas where students make mistake in this standard. Now to proceed to the definition of borrowing cost, and I am expecting in November 23, we are going to have a question from this area because the last 3 RTPs have the same question, and this concept is a beautiful concept, never tested in any of the attempts. So quickly, what is borrowing cost? The definition says borrowing cost includes interest, commitment charges. Borrowing cost includes interest, it includes commitment charges, it includes premium or discount that will be amortized, it includes finance charge in a finance lease, basically AS 19, EMI paid, interest part, tell you in simple words. So borrowing cost is not only interest, guys. Of course, you can understand my handwriting, so I am repeating. Borrowing cost is not only interest, it is commitment charges, premium or discount on amortization of securities on issue of redemption, then finance charge in a finance lease. These are theory areas. There is one more concept over here, which we don't have a sum in ICAI study mat, but RTP it has come many times. Exchange difference on foreign currency borrowings to the extent attributable towards interest. We are going to do 2 sums in the next 2.5 hours in this. One I am going to do now as an example because it's important, and one we are going to go and do it in RTP. So let's be quick, guys. The last core concept in this standard. Let's say you are borrowing, let's say 10 lakhs in India at 10%. The interest will be 1 lakh. The same thing if you want to borrow abroad, assuming dollar rate at 80, you will borrow how much? 12,500, correct? We will borrow 12,500, okay. Now, assuming when I borrowed, the dollar rate was, let's say 80, like I said, it's 80, okay. So, what later when I am repaying, assume the interest rate becomes 90. So what? How much I will repay as interest? 12,500 into 90 into interest rate in abroad. Generally, abroad interest rate will be low. So assume it is 4% into 4%. How much, guys? 45,000. This concept, mark it as extremely important for November 23, guys. We can see it in the exam question paper. Interest in India is 1 lakh. Same if I borrow in abroad, interest is 45,000. So I am celebrating, I am happy, this interest is lesser. But I come back and tell you, boss, interest is less. But shouldn't you repay the principal? Yes, I have to repay the principal. How much you have to repay principal? 12,500 into extra. Earlier you borrowed at 80. Now you have to repay at 90. So extra 10. 90 minus 80, we get 1 lakh. 25,000 I have to pay extra, guys. So this is my summary. If you understood till here, the next step is going to be little easier. To summarize, interest if I borrow in India is 1 lakh. Interest if I borrow abroad is 45,000. I am celebrating, but before I finish my celebration, I found out loan which I have to repay at the end of 1 year or later, dollar rate went to 90. So I have a forex loss of how much, guys? 1,25,000. Simple. For exam viewpoint, leave the concept. What is the gain on interest? 55,000. 1 lakh is interest. This is 45,000. Okay. What is the loss on forex? 1,25,000. So this 1,25,000 will be split as 2. The gain on interest 55,000 and the balance how much? 70,000. What I will do, I will tell this entire 1,25,000 is not a loss. To the extent of the interest saved, I will categorize it as interest and borrowing cost. This only will be the loss. So to summarize, in this sum, the total interest I will capitalize is not 45,000, which is the actual interest paid. It is 45,000 plus this 55. Total interest I will capitalize is how much? 1 lakh. Breakup is this 55 and that 45. My forex loss is only 70,000. It's only how much, guys? 70,000. In other words, if I borrowed in India, you borrowed how much, guys? 10 lakhs. You paid interest of 1 lakh. Totally 11 lakhs. If I borrowed abroad, interest was 45,000. If you are repaying 12,500 into 90 is how much, guys? Into 90 dollar rate, how much? 11 lakh 25. If I total 11 lakhs 70,000. So now you can see 11 lakhs is what I am going to repay if I borrowed in India. If I borrowed abroad, it's 11 lakh 70. That extra 70,000 only is considered as forex loss. To the extent of 1 lakh is considered as interest. This is the computation we are doing over here. This is equal to an exam sum. Now in the same sum, if my forex loss instead of 1,25,000, assume dollar rate went only to 82 from 80, then my forex loss will be 12,500 into 2, 25,000 without calculator, guys. 25,000 we get. Now if it's 25,000, how much will be my interest? Interest will be very simple. Existing 45,000, if that's the interest, assuming that's the interest, if 82 plus this 25,000 will fully be interest, or other words, simple, the maximum amount of interest cannot exceed 1 lakh. The maximum amount of borrowing cost cannot exceed 1 lakh. So my forex loss up to the savings will be treated as interest. My forex loss beyond this 1 lakh will be treated as forex loss. But if my loss is less than 1 lakh, then fully will be treated as borrowing cost. That's it. Are you following, guys? Same sum. This is equal to exam sum. We're going to do one more sum in RTP when we go to the end of the discussion. Mark it as very important. So what all we finished, guys, quickly. We understood what is borrowing cost, interest, commitment charges, finance charge and finance lease, amortization of premium discount and exchange differences. If this borrowing cost is incurred on a qualifying asset, we saw definition of what is qualifying asset. Then if the qualifying asset is for construction activity taken place, borrowing cost is incurred, I started paying interest. If you took loan, if you don't pay interest, I will not capitalize. If everything is satisfied, then I will proceed, and anywhere it fails, I will not capitalize the interest. I will debit it to my P&L account. Few other important concepts over here. Now, during construction, work is stopping. What should I do? 3 concepts, guys. 3 concepts. 1, we call it as suspension of borrowing cost, or basically in other words, suspension of work. What to do with borrowing cost? During construction, some flood came, earthquake came, COVID came. Is it in my control? No. That time, borrowing cost, if it is an unavoidable suspension, then borrowing cost I can continue to capitalize. If it's a avoidable suspension, then borrowing cost will be debited to my P&L account. What is avoidable suspension? Trade union strike, internal management issue, some issue between where it's in my control. I can resume the work if I want to resume. That is avoidable suspension. This again is important concept, never tested. Next is cessation of borrowing cost. When should I stop? House is ready. After house is ready, somebody is telling, sir, I'm going to spend another 3 months to do interiors, small change. I need to buy dining table, that is pending. Once the asset is substantially ready for intended use or sale, I will stop the capitalization. Sir, one apartment has 10 houses, 7 houses ready, 3 houses still construction going on, Casa Grande is building. Then for 7 houses, you stop borrowing costs. For 3 houses which is construction pending, continue borrowing costs. So multiple assets capable of independent use, then I will stop borrowing cost for those assets which is completed. Last concept, sometimes borrowing is of 2 types, guys. Specific borrowing, general borrowing. This is the last concept. With this standard comes to an end. I'll give an example. Let's say I have 3 loans. 10% SBI loan of 10 lakhs, 12% PNB loan of 15 lakhs, 15% ICAI bank loan of 20 lakhs. All these 3 is used for some asset. Now, which loan to take? Let's say SBI loan is borrowed. SBI loan is borrowed specifically for the purpose of this qualifying asset. I borrowed for this. I took money from parents 500 to go to movie. Exact direct match. Then straight away apply this. 10 lakhs into 10%, 1 lakh will be capitalized. And whenever there is a specific borrowing, use that first. Because imagine if you go to movie, parents give you 500. First you will use that, then you use extra money. So first you use what is specifically available. Later, the general loan that we have, how to do it? First you compute this general loan together could be 35 lakhs, 20 plus 15. But out of this, I could have used only 5 lakhs. I could have used only 6 lakhs. I could have used only 12 lakhs. I don't know which loan is used. PNB loan, ICICI bank, because it's general borrowing. They're in the business for many years. Which is left, I don't know. We can't use FIFO over here. So, what is the total amount of interest payable on this loan? 15 lakhs into 12%. How much, guys? 15 lakhs into 12%. 1 lakh 80,000. 20 lakhs into 15%. 3 lakhs. Okay. So, my total interest that I am going to pay in this case is going to be. So, compute the total interest payable, guys. This total interest is payable on a total loan of 35 lakhs. No, do not consider specific borrowing. Specific borrowing is separate. Take only general. This is 20. 20 plus 15. How much, guys? 35. So 4 lakh 80 by 35 is how much? Percentage. 13.7 some percentage. So this will be something called weighted average cost of borrowing. This rate I will apply on the actual usage. It can be 6 lakhs, it can be 5 lakhs, it can be 12 lakhs. But be careful. What if the actual usage is 50 lakhs? If you apply this percentage, your answer will be wrong because loan is 35 lakhs. If usage is 50 lakhs, you have to stop at 35 lakhs. If there are multiple assets, proportionately. Do in the ratio. Are you following, guys? The maximum interest always should not exceed 4,80,000 in this case. And one more point of check where students miss to do that. We are doing weighted average cost of borrowing. So your answer, what is the answer here? 13.7 should not be less than 12. Should not be more than 15. Average in a class, in school, we used to do weight and height in childhood days. So they will tell lowest weight is 50 kgs, highest weight is 80 kgs in class they will tell. Can the average weight be 90? No. If cricketer lowest is 0, highest is 50, can the average be 60? No. So here lowest interest is 12%, highest is 15. So your weighted average cost of borrowing should be between this and other check. So what are the checks you have to do in exam? The total interest payable should be equal or less than what is capitalized. Capitalized amount cannot exceed. Weighted average cost of borrowing should be between this. First use specific loan. If there is advance or purchase of truck, give assumption. These are the areas where students lose marks. Examiner comments. Are you following, guys? So we spent 25 minutes, finished borrowing cost in rocket speed in our rocket revision. Okay. And I told you what's important. I'm going to focus on what's important. That interest part, foreign exchange interest, never tested in exam. Look out for that in November 23 exams. Following, guys. With this, we are done with AS16 borrowing cost. Finally, endly or give conclusion. How much capitalized, how much debited to P&L pass entry. Asset account debit, interest expense account debit to bank. With this, we are done with AS16. Okay. Now we are going to proceed to AS13, a standard which usually people skip for exam. But I don't know why they skip this. Now AS13 is a breakup of investment accounts and investment chapter in module 3 of group 1. We are not discussing that part here. Investments we are not discussing. We are discussing only AS13 investments. Simple, guys. Investments are classified into two. As per AS13, investments are classified into two. Current investment, non-current investment are also known as long-term investment. Standard uses the word long-term. Okay. Those who are watching recording, I'm drinking water, guys, not coffee in between the class. Okay. Now, current investments and non-current long-term. First, I should know how to classify something as current and non-current. This standard is only 10 minutes, guys. 10 minutes if you learn. Even if you are studying AS13 first time, enough for exam. Okay. First is to classify as current or non-current. How to classify? It depends on the intention of the user. It depends on what, guys? Intention. I purchased the shares. I want to sell after 1 year, 12 months, more than 12 months. It becomes long-term, non-current, long-term. But after classifying as long-term, can I sell within 3 months? Yes. It's not about follow, guys. It's not about what you do. It's about what you want to do. But in exam, don't write like this. Intention. It's about the intention of the company. If my intention is to hold for a longer period, then it is non-current. If intention is to hold for a short period, less than 12 months, then it is current. See, I might have intention of selling it within 2 months. So I classify it as current. But I will not sell. I can even be not selling. So I'm going to ask you a question. If you get this right, classifications, then we can proceed. Year 1, I purchased shares of ITC. Intention was to sell whenever I make profits. I'll classify as current. I didn't sell. Year 2 again. Every year you have to reclassify. Year 2, I asked you, do you want to sell? Yes, I'm going to sell, sir. Whenever I see profit, I'm going to sell very soon. Classify as current, but I never sold. Is it okay? Yes. Year 3, intention is to sell. So I'll classify as current, but never sold. Is it fine? Yes. Year 4, I am again asking you, 3 years over. This year, what's your intention? I'm going to sell within 3 months if I get profit. Classify as current, but I never sold it. It's okay. It's not about what you do. It's about what your intention is. Well, classification. If you look at the word intention, is so important. If I go back to the definition of borrowing cost we just now saw, the borrowing cost definition also has the word intended, intention. They are also ready for intended use, not actual use. Is it ready for use if I want to use? Here also intention. So it's simple, guys. So once you classify as current and non-current, whatever investment in shares, debentures. Sorry, how do we classify it? Current will be classified at lower of what price you purchased, cost or fair value, which is nothing but market value, whichever is less. That's it. Like how inventory is cost NR, whichever is less. Here, cost or fair value, whichever is less, guys. That's it. Cost or fair value, whichever is less. Done, guys. That's all. Every year I have to compare this and I have to find it. If it's non-current investments, now simple logic, if something is going to be kept for a long period, I don't bother about small price fluctuations. So long-term investments will be valued only at cost. Long-term investments will be valued only at what, guys? Cost, cost and cost. Long-term investments will be valued only at cost price. Sir, what if the cost is 100, market price is 130, I don't care. Cost is 100, market price is 90, I don't care. Cost is 100, market price is 70, I don't care. Cost is 100, market price became 20, I don't care. Because I believe that this 20 will come back to 130 later. Price fluctuation is temporary. But standard tells if the fall in the investments is permanent, then I will write off the loss. If this 100 becomes 20, then that 80, if it's a permanent decline, then I will write off. But don't write the word permanent in your notebook. Standard uses the word other than temporary because they don't want to use a negative language of permanent. So in exam, permanent only, but when you're writing permanent, write the word if the fall is other than temporary. So your answer should not mean should not, you have the word permanent. It should have what? Other than temporary. That's it. AS 13. Current investment, non-current, how to classify. Current, cost or fair value, whichever is less. Non-current, cost, unless the fall is other than temporary. Now you have to classify reclassification. Current to long term, long term to current. Can I do this? Yes. I will transfer both at the lower of cost or this will be current to long term will be cost or fair value, whichever is lower, because always current will be restated at fair value. This will be cost or carrying amount, whichever is lower. Are you following, guys? Cross check this. Yes. Okay. So cost or carrying amount, whichever is lower. The difference of carrying amount and fair value, be careful. They have not tested this, but if they test this, carrying amount is the book value. Are you following, guys? Fair value is the market value. Are you understanding, guys? Clear? Okay. This is how the transfer takes place. With this, we are done with AS 13 also. That's it. Exam questions, you can solve all the questions. Fine. Now we'll proceed to another important standard for exam. AS 12. Accounting for government grants. Got it checked? Same? That's about it. You can make a note. We'll proceed to AS 12. Before we proceed, is the speed fine? Okay. Anywhere you guys feel the speed is, what to say, too much, let me know, or any specific concept names you want to cover, we'll take it up. We are keeping it exam focused, whatever can come in exam. Next, moving on to AS 12, then we'll go to AS 11 and we'll keep going in reverse. AS 12 talks about government grants. AS 12 talks about government grants. What is government grant? This standard is only twofold, guys. What is a grant? What is a grant? And how to account for a grant. That's it. What is a grant and how to account for a grant? First, let's finish what is a grant, one simple definition, and then we'll go to accounting and standard comes to an end. What is a grant? They are saying grant is any assistance from whom, guys? Government in cash or kind. That's all. Government grant means refers to any assistance from government in cash or kind. This they are saying. Two things you have to know. What is government here? Under the definition, government includes three things. Central government or any other government department or agencies. Like what is government department or agencies? Ministry of Health, Ministry of Finance, any other corporation, local corporation, those things. Then they are also saying any other body which is similar to the above. I am writing the hint points. Any other body which is similar to the above. Above means central government, state government, these authorities, whether it is local, national, and they use the word international. So international then will include IMF, WHO. These things also will get considered. Okay, US government helping us. Okay, so any assistance from government in cash or kind. Cash means I'm getting cash, kind means some benefit, free food or whatever from these people only. So if Ambani is coming and giving a donation, let him give, but not accounted as per AS 12. But can I use the principles of AS 12? That's your choice. Are you able to follow, guys? Now, again to proceed from the same definition, we are going to switch into two more parts over here. With that AS 12 theory will get over. The definition again gets reclassified or related points is conditions when I can account and exemptions when the standard is not applicable. Exemption is 2 points they have never tested. This is the good place where they can test. Whenever government gives any tax exceptions, they give tax exemptions in many cases. That is not a government grant. Like tax holiday, SEZ exemption, these are not government grants because it's given for everybody. Second, government participation in the equity of a company. That means they are not giving grant, they are investing. Government participation in equity and tax exemption is, what to say, not considered in AS 12. Next to two conditions for accounting or three conditions. The amount should be certain or amount should be reliably measured. Reliably measured amount should be certain. The words is no uncertainty in amount and no uncertainty in ultimate collection. So amount should be certain, amount should be exact. They can't tell you may receive 10 lakhs. No, you will receive exactly 10 lakhs. And there should be no uncertainty. The words is in simple, no uncertainty. No uncertainty in amount, no uncertainty in ultimate collection. No uncertainty amount, no uncertainty in ultimate collection. And also you can write another point. All the terms and conditions, if any, associated with the grant should be followed. They will give conditions sometimes. Those conditions should be followed. So when I will account, the conditions for purpose of accounting is three things. No uncertainty in amount. There should be no uncertainty in ultimate collection. Terms and conditions will be followed. Following, guys. This is conditions. So to summarize, assistance from government in cash or kind, from central government, state government, any other departments or similar bodies, local, national or international. Conditions for accounting, no uncertainty in amount, no uncertainty in ultimate collection. Terms and conditions are satisfied. If any, tax exemptions is not a government grant. Government in equity, participation in equity is not a grant. So we are done with all the theory. Sir, what happens if these terms and conditions are not met? After receiving grant, grant has to be refunded. Refund of government grant is treated as an extraordinary event as per AS 5. It's a group 2 standard, but it's that simple. Refund of government grant is what? Extraordinary event. That's all. Okay. Next. Proceeding, guys. Accounting. How to account? One chart. We're going to finish the entire accounting, which you can revise. Grants are classified into two: monetary grant and non-monetary grant. 10 minutes in this chart and the standard comes to an end. Monetary and non-monetary. Again, those who are watching recording, I can show you a material and run you through it. Then the class will get boring of me reading what's over there. That's why I'm focusing on the key concepts for exam. Monetary and non-monetary. Under non-monetary, what do we have? Two again subclassifications. Monetary, we have 3. Okay. Follow, guys. If you go back up, I told you definition of grant: assistance from government in cash or kind. So that cash only is monetary, guys. Kind only is non-monetary. Non-monetary. So we have to think about accounting. Accounting means entry. So entry, monetary means what you are receiving, cash. So debit will always be. Discussion is what to credit. In non-monetary, what I am receiving? Asset. So here, debit will always be asset account debit. This will not change even if they are going to ask you 10 lakh questions in AS12. I'm just giving a number to tell you. In all sums, if it's a monetary grant received, debit should and always will be bank. If it's a non-monetary grant, debit will be asset. The question is what to credit. In non-monetary, there are two types of grant. Non-monetary received free of cost, non-monetary grant received at a concession or discount. Very simple. Concession means a 10 lakh asset, I am paying 7 lakhs. Discount, guys. Indians, we love discounts. We keep asking discounts. Like that, government is giving discount. So entry will be debit. I already told you, asset account. Credit will be what? Bank, because I paid a what price? 10 lakh asset given to me at a discount of 7. We treat this as a trade discount and entry will be passed only for 7 lakhs. The price that you pay, whatever price you are paying, that will be the entry. That's it. Free of cost. In exam, he will tell company received grant free of cost. They did not account. Is the accountant correct? You should tell no. Replace the accountant. Make me the accountant after I become CA. Now, free of cost. Entry will be debit. You all know. Asset. Credit. I am not paying anything, so I can't credit bank. So simple. I'll tell the logic on a different day. But here for exam, credit capital reserve. Sir, entry. Okay, sir. Credit. Very sorry. Yeah. Credit is capital reserve because I can't credit anywhere else. Can't credit my income, asset or liabilities or share capital. Capital reserve for what amount? They use the word nominal amount. What amount, guys? Nominal amount has to be credited. So simple entry. Asset account debit to capital reserve. At what price? Nominal amount. Capital reserve. Capital reserve for nominal amount. Nominal amount is what? 10, 5, 100. Are you following, guys? That's about it. If you want to take it to revenue reserve also, it's fine because it's going to be 100 or 10 rupees. You won't have any impact majorly. But why they say capital reserve is because you don't get free every day. That's all. Nothing beyond that. It's mainly for recording the transaction more than the amount. Nominal amount can be 1 rupee, enough, 1, 10, 100, that's it. Next, if the asset is received monetary, let me finish first one. Who invest into business? Promoters. If they use the words like money is given for the purpose of setting up of business, initial investment, then we call it grant in the nature of promoters contribution. Grant in the nature of promoters contribution. Like a promoter, he is giving a bulk amount, 5 crores, 10 crores to set up the initial factory, to start the business, initially to buy. Entry here will be, debit is going to be bank, credit will be capital reserve. We can't credit capital account, so I'm going to credit capital reserve for whatever amount comes. Sometimes they will tell promoter's contribution is being used for declaring dividend. No, you can't use for declaring dividend. This promoter's contribution, does it come every year? No, only once. That's why capital reserve. The next grant comes recurring. Electricity bill waived off, or every year I will reimburse electricity bill. A grant where the benefits are recurring in nature, we call it as revenue grant. This could either be a reimbursement of an expense, or this could be giving the cash. So my entries of two options. Debit is bank, guys. You can credit P&L account because it is recurring in nature, or you can credit the relevant expenditure. So two things, you can credit profit and loss account, or you can credit what, guys? Expenditure account, whatever expense. Whichever expense is reimbursed, credit that expense. Are you following, guys? So we have promoter's contribution, bank to capital reserve. Revenue grant, bank to P&L or expense. And next one guys, is follow grant in the nature for purchasing a specific fixed asset. Sometimes the government will give money and tell you have to buy this asset. Are you following, guys? So grant in the nature of purchase of specific fixed asset. When I purchase the entry, because they might give me the money later, first I will purchase, then they will reimburse. So when I purchase, entry will be asset to bank. Here also same. I will tell you what is here. Okay. When you receive the grant, reverse the entry to account for discount. Bank account debit to. Here also same. This is option 1. This is in related to which asset? If it's a depreciable asset. This is a non-depreciable asset. Sir, why you classified if it's same? Yes. So far, the whole thing is same. The second alternative is a method called deferred grant method or deferred income method. So the first entry will remain the same, asset 2. No change in that. The next entry, when I receive the grant, bank account debit, instead of crediting asset, I will credit something called deferred grant account. Let me give you a small example with numbers because students sometimes struggle here. It's very easy, guys. Let's take a simple example where asset, this is the last example. Once this gets over, AS12 comes to an end, next 5 to 7 minutes. Let's say I purchase an asset with a life of 5 years and residual value of 5. My depreciation per year is 9. Okay. So I will depreciate year 1, year 2, year 3. Every year I will assuming SLM method, guys. I will depreciate 9 every single year. Now, if grant is received, let's say 10 lakhs of grant, then you will do 50 minus 10 minus 5 divided by 5, you will get 35 by 5, you get 7. Then I will debit my P&L with 7. This is the case if the grant is received in the first year. What if grant is received later? So assume grant is received in year 2. What is the book value of at the end of year 1? I purchased for 50 minus depreciation of 9. So book value is 41. How many years are left still? 4 years. First year over. 4 years. What is my residual value now? 5. 36 by 4. I will get second year depreciation also 9. But now if I get grant in second year minus 10. Now if I do 41 minus 5 minus 10 by 4, how much are you getting? 36, 26 by 4. 6.5. So in year 2 my depreciation will become 6.5. Correct guys? Yeah, 6.5 is depreciation in year 2. So since depreciation is moving, I want my depreciation to remain the same. So what I will do, I won't credit the asset. So my depreciation will remain all the years at 9, but look at this very carefully. See, I am not crediting the asset. So my depreciation will still be 41 minus 5, 36 by 4, which is 9. I am crediting an account called deferred grant account for the grant of how much guys? 10. Are you following guys? Okay. Just check if it's 6.5. First year 950 minus 941 minus. Yeah, 26 by 4, 6.5. Now I received grant of how much guys? 10. Okay. Now this grant of 10 will be transferred back to my P&L account every year. So depreciation will remain at 999, but I will transfer back to P&L in the ratio of depreciation. This should not be 6.5. Hold on 1 second. 41 minus 5 end of year 1 grant is 10. Okay, 6.5. Okay, this grant, correct, we are right, no change guys, it's 6.5 only. 6.5, it's perfect, 6.5. So year 1 depreciation is how much guys? 9. Nothing will come here. When I receive the grant? Year 2. I received grant in year 2. Now year 2 I received the grant. So year 2 onwards my depreciation will be 9999. No change, every number is correct. Don't get confused. Okay. Now year 2 my income is 10. So year 1 depreciation is 9. Year 2 also is 9999 because I am not reducing grant from cost of asset. But this 10 will be transferred back to P&L in the ratio of depreciation. How many years depreciation is left? 4 years. So 10 will be transferred back to P&L in the ratio of 9:9:9:9, which is 1:1:1:1 for 4 years. How much you get guys? 2.5, 2.5, 2.5, 2.5. So now the net will be 6.5. So basically what entry you will pass when you receive the grant is bank account debit to deferred grant. How much? 10. In end of year 1. In year 2 from deferred grant, which is part of my reserves and surplus, I will transfer back to my P&L. Deferred grant account debit to P&L 2.5. That's it. I will keep doing this in year 2, year 3, year 4, year 5. This will become 0. So what happens? My P&L account depreciation will be unaltered at 9. But this side I will make impact of 2.5. Net effect is 6.5, but depreciation amount will not change. Are you following, guys? Now next question is, this is accounting for grant. Next they are going to ask us refund of grant. Whatever entry you passed for accounting of grant, you will reverse that entry. For example, over here, I pass the entry for receiving grant, bank account debit to asset. Refund will be asset to bank. Here I pass the entry, bank account debit to deferred grant. Refund entry will be deferred grant to bank. But sometimes when refund happens after a few years, I might not have enough money in deferred grant. Refund, for example, in this case, we received grant of 10. So full 10 will be refunded. But assume in deferred grant, we had 10. First year, how much you transfer? Second year, you transfer to P&L. 2.5. So what will be left in deferred grant? 7.5. So I can debit only 7.5. The balance 2.5 will be debited to my P&L. Sir, logic okay, sir. But for exam, what remember? Whatever entry you pass for grant, you will reverse that. Here also I pass the entry bank to deferred grant. My reversal entry will be deferred grant to bank. But if the balance in deferred grant is not sufficient, the deficit will be debited to my P&L account. That's it. This is with regarding AS12 accounting for grant. Easy one. We saw the whole chart, guys. I hope you understood. So we are done with AS. 1 hour is done. We are done with AS 16, AS 13, AS 12. I hope you are able to follow, guys. Okay. Next we are going to go to AS 11. And this side, just missing out one more concept in AS 11. Sorry, AS 12 before I go there. This is in case of depreciable asset. In case of non-depreciable asset, this concept of deferred grant null is not there. Instead of crediting asset, so for non-depreciable asset, you can do two things. When I receive the grant, bank account debit to asset, or instead of deferred grant, bank account debit to capital reserve. Are you following, guys? This is AS12. AS16, one more small concept, very tiny concept. Sometimes, just going back to AS16 for exactly 1 minute, sometimes in borrowing cost of the loan that is used for borrowing cost, same money will be invested and we will earn some temporary income. If borrowing cost is 20, if the temporary income is 2, then you have to net off both and take the net to borrowing cost as 18, and from this 18 you can proceed with the sum, either capitalize or debit to P&L. Find the net interest, net borrowing cost. Are you following, guys? To repeat, this loan, if I have idle funds, I will invest and earn some income. That income should be adjusted with the interest, expense, and then balance only will be capitalized. Are you following, guys? Not only balance capitalized, this balance only will be split as how much to be capitalized, how much to be debited to my P&L account. Okay, that's another small concept. We missed it there. So I just want to take it up again. So now we are properly done fully all core concepts of AS 12, 13, 16. Now we will move on to AS 11. Okay, AS 11. Before we go to AS 11, those who are watching, very careful about your health, guys. Just 10 days for exam. The last thing we wish is to fall sick at this time. So before we go to AS 11, no outside food till exams end, and ensure you drink at least 500 ml to 1 liter of hot water every day. You are not taking class. I need hot water, but hot water will help you so that you don't get any, any infection, nothing, because hot water automatically will kill half the bacteria, etc. So you can also drink hot water like this. Just joking, guys. Now coming back to AS11. AS11 is categorized into three parts. First, they talk about foreign currency transactions. Then they talk about, after foreign currency transactions, we discuss about foreign operations, and last one we discuss about forward contracts. Like I said, this time the question is AS11 plus AS16 combination question, which we already saw about that interest. So interest will be capitalized as per AS16, the balance exchange loss as per AS11. That question covers two standards. Now, this is the breakup of the standard. Foreign operations, let's be quick. They classify foreign operations into integral and non-integral. Integral operations are simple. Foreign operations which are same as Indian operations, even though it's in foreign location, we treat it as our family, like a dependent branch or more than dependent branch. Even if it's independent branch, it will be independent branch. The concept over here is the foreign operation can be subsidiary also. Whatever is earned there comes back to India or the home currency or the home country, reporting currency. Sometimes home country can be other countries. That's why I'm saying whatever is earned in the foreign countries, it comes back to the home country and we have continuous transactions among us. It's a part of our operation. Non-integral means whatever is generally earned there is retained over there. We don't have a lot of transactions between that entity and here. For example, integral operation, Agarwal Eye Hospital in Chennai has branches in Africa, integral to our home business. Tata in India, Tata Motors have invested in Jaguar. Now Tata Motors will not go tell Jaguar, replace the seat, put Tata seat. We will not interfere in Jaguar operations because they are doing extremely good job. I just invested, left it to grow. That's a non-integral operation. Now this sum will not come in AS11, so it won't come in accounting standards. It comes only in branch accounts in foreign branch, where you should remember the exchange rates for integral and non-integral. Okay, non-integral not a big issue, guys. For non-integral, everything is closing rate. Majority, 99% is closing rate, and they generally don't ask in non-integral much. They ask only in integral foreign operations. I'm not going to do a branch account sum over here, but I'm going to classify quickly into how do you remember the rates, because it's anyway part of our syllabus. Okay, we are classifying our items into monetary and non-monetary. So monetary, non-monetary. Sir, I get confused in this, sir. What is monetary? What is non-monetary? Monetary is basically those things where the amount is realizable in fixed or determinable amount. For example, if you take in the balance sheet, if you take loan, amount to be repaid is fixed. Trade payables, amount to be repaid is fixed. Bank, amount received is fixed. Trade receivables, amount received is fixed. These are called monetary items. These are called what, guys? Monetary items. Are you following, guys? These monetary items will be translated using closing rate. Logic is what you realize over here is fixed as of 31st March, so you take 31st rate. Next, proceeding to non-monetary items. What are non-monetary items? Those items the amount to be realized as of 31st March is not fixed because there is a lot of uncertainty in that. Fixed assets. Book value can be 1 lakh, but will you realize 1 lakh? Can be high, can be low. Related to fixed asset, I am taking depreciation. Then I am taking stock, investments. Then I am also taking all the nominal account items. Basically, my trading and P&L, all sales, purchase, expense. What rate to take? To remember for exam. Nominal items like sales, purchase, electricity, rent, take average rate as it's incurred throughout the year. Then we also have opening stock. Okay. Investments, you will take the closing rate if it's valued at NRV or fair value. Following guys. Stock also same logic. If it's value, generally stock will be taken at what guys? Closing rate. But because if the question is silent, you take what? Closing rate. All the exam questions are only closing rate. But if they tell it's valued at cost, which is older cost, then you will take an actual rate, which was the rate on the date of purchase of stock. Investments also same. If you value at cost, you will take the actual rate before. If you are not doing any restatement. But so far in none of the sums, this actual rate application has taken place. That means in branch accounts, foreign branch, where the question is silent, you also silently take closing rate and don't think much. That's it. That's what comes in exam. So far that only came. Trend will not change. Unless question gets tricky and they give you different rates and tell closing stock is valued at cost. Like that, if they give you a different hint, then you take and they will give you below, he'll give you the answer. Actual rate when the stock was purchased was this. Thank you for the answer. Take that. But it will never happen because so far we only have closing rate. Fixed asset. This comes in exam. No closing rate for fixed asset. Fixed asset is what rate? Actual rate on the date of purchase of the fixed asset. Reason, if you take closing rate, asset will be appreciated if dollar rate increases. Depreciation also same as fixed asset, because now depreciation is an exception for nominal account. Are you following? Nominal account is average rate, but depreciation take the same rate that you took for fixed asset. Opening stock, tell me what rate guys? Opening stock. Opening rate, that's it. If you know what rate to take for what item, foreign branch is over. Convert from the dollar to Indian and then prepare. Are you following guys? So opening stock, opening rate, fixed asset and depreciation, actual rate if given. Sir, if actual rate is not given in question for fixed asset, actual rate they didn't give, then I will take closing rate. Nothing else to be done, which is not correct. Okay. Stock, closing rate if question is silent. Otherwise, if they give data that whenever stock was purchased, actual rate. Cost means we take actual rate. NRV means closing rate. Investment also same logic, nominal account, average rate. This is in foreign branch, you get application. And one more thing, wherever there is a contra or mirror ledger, like here HO account, here branch, here goods sent to branch account, the GSP account, goods received. Wherever there are accounts which are same, ensure in branch, you should reconcile the pending transactions. Do the recon for all the transactions. Ensure there is no transaction missing to be accounted. What rate to take? No rate. Don't take any rate. What I should do? Instead of taking a rate, I will no rate guys. Instead of taking the rate, I will take the exact value in India. So in foreign, if it is $7,000, In India, if it's only, let's say 70,000, no conversion. Whatever is in India, that you will take. No conversion. Exactly, mirror ledger take the same value, no conversion. Then the difference is forex loss or gain. This is foreign operations, some you do in branch, I just revised the rates. Foreign currency transactions are very simple, guys. Foreign currency transactions, what they say, whenever you are going to incur any transaction cost, whenever on the date of transaction, you take the transaction rate and you pass the entry. Assuming this day rate was 75, pass entry for 75. Could be asset, could be liability. On the date of settlement, whatever is the settlement rate, settlement is 78, take the 78 and pay. I accounted a liability for 75. I am paying the liability at 78. So my loss is 3, debit to my P&L. But some will not come like this. In between, they will give a balance sheet date. So what? On balance sheet, do a restatement of the liability. When I recorded liability, it was 75. On balance sheet date, liability is 77. So I will restate. How I will restate? P&L account, debit to liability. I will do the restatement. When I am doing the settlement, I settled at 78. So again I will debit the loss to P&L, but this time loss is not 3, 1, because already 2 loss has been restated on balance sheet date. If same thing is not liability, sir, it's an asset, same values. When I recorded asset, it was 75. On balance sheet date, I will record a gain of 2. On settlement day, again a gain of 1. Again a gain of 1. That's it. That's all you have to do in foreign currency transactions. Pass the entries. If the transaction is for purchase of an asset, then if you have a loss, standard gives us option that instead of debiting P&L, you can debit the asset itself. If it's the depreciable asset, this loss of 2 and this loss of 1, if the question specifically tells company exercise the option, then instead of debiting the loss to P&L, I will debit what, guys? Asset, and this loss will be apportioned to my P&L as depreciation over the years. The idea is, instead of accounting full loss in 1 year, debit the asset and I will apportion. Sir, what if it's a non-depreciable asset? Then I will debit an account called FCTMR account, foreign currency translation monetary reserve account. This is also there, but this they don't ask in exam. Only asset has come in the exam, guys. It has come in the exam. We have a study mat question. Simple. Foreign currency loss when you purchase asset on translation. Instead of debiting P&L, debit what, guys? Asset. That's it. Are you following, guys? Clear? Gain, don't credit asset. Gain, transfer to P&L. That's it. Are you following, guys? This is foreign currency transactions. Next, if it's a forward contract. I'm not telling you what is a forward contract much, but in simple words, forward contract, assume today dollar rate is 80. I have to make a payment after 3 months. I am not sure what will be the actual rate after 3 months. So I will go to the bank, enter into a forward contract and lock a price of 85. That means today if I have to pay $10,000 as liability, I incurred liability when dollar rate is 80. After 3 months, I will pay 10,000 into 85. Actual rate can be 90, 150, 60. I don't care. Ignore that. Ignore that. I will pay only 85. So this forward contract is classified into 2. Forward contract for the purpose of hedging forward contract for the purpose of speculation. Hedging means I genuinely entered into transaction to protect my risk. Question will not tell hedging. How they will mention? They will tell the person purchased an asset. So because I purchased an asset, I am entering into a forward contract to protect my risk. Like this they will use words. If it is for hedging, what is my loss in this case? $5. What is purchased for 80? I mean liability of 80, I am settling at 85. So this 80 is called today's rate, spot rate. 85 is called forward rate. My, if it's in case of hedging, my loss will be forward rate minus spot rate, forward rate minus spot rate. This will be apportioned to profit and loss account proportionately over the period of the contract. Here what is my loss, guys? $5 on an amount of $10,000, guys. 5. So what is my total loss? 10,000 into $5 into 5 rupees. Yeah, 5 rupees into 5 rupees. How much, guys? 50,000. What is the period of contract? 3 months. So I will apportion over a period of 3 months. Are you following, guys? That's it. If it is for purpose of speculation, they will say asset is not purchased. Time pass, I went and purchased forward contract. And in that case, I will purchase a forward contract at 85. How you sell shares and currency, this contract also can be sold. This contract can be sold at 90, 150, 60, different prices. So here, normally, excuse me, yeah. Normally for speculation or normally for selling something, we do selling price minus buying price profit. See, let's say you purchase something for 100, you sold for 120, profit is, so you will do 120 minus 100, profit is 20. So what you have to do, if you purchase a forward contract for purpose of speculation, my entry will be selling price of forward contract minus purchase price of forward contract. Whatever is the profit, or sometimes we get even loss, will again be apportioned, over this time period from the date of purchase to date of sale, not the period of forward contract. If you purchased, let's say on 1st Jan, sold on 1st Feb, in the period of 1 month. So here, if it's for the purpose of speculation, don't bother about forward rate or spot rate or other actual rates, a given question. At what price I sold the contract, take that. At what price I purchased the contract, take that. So selling price minus purchase price. Are you following, guys? Clear? Understanding? Okay. With this, AS11 also comes to an end. Get a breather. Now we have only AS1, 2, AS10, AS3, which is cash flow statement. Okay. Now let me go to AS1, AS2, AS3. I will finish a few standards. Then I will jump to our RTP. Do the questions. Then come back and do the balance standard. So we will cover everything. But middle we are going to bring in RTP. Then go back to standard. So I will just take another 1 or 2 standards now. Finish it. Go to RTP. Come back. We will keep AS10 for the last. So whatever leftover time we have, we can spend all the concepts of AS10. Fine. AS1 is just a 5-minute standard, guys. I'm only going to discuss for exam what is important in this standard. AS1 talks about disclosure of accounting policies. What is accounting policies? Accounting policies refer to specific accounting principles and the method of applying those principles adopted by the enterprise in preparation and presentation of financial statements. Definition again, accounting policies refers to specific accounting principles adopted by the enterprise in preparation and presentation of financial statements. In other words, what policy is used for accounting principle? What accounting policy is used for accounting principle in preparation of FS? For example, accounting principle is inventory valuation. Accounting principle is inventory valuation. I have to do inventory valuation in FS. For this, what accounting policy I am using? FIFO or weighted average. So to summarize definition, accounting policy FIFO or weighted average is used for the accounting principle of inventory valuation for FS valuation. Another example, accounting principle is asset valuation, PPE valuation. For the purpose of fixed asset, accounting principle, how to value my PPE. For this, my accounting policy, I can either use cost model or revaluation model. Are you following, guys? I will use cost model or revaluation model as per AS10 for the purpose of asset valuation, which is asset principle for FS. Now, important thing to note here, they have not tested in exam after amendment. Change with SLM and WDV, the change, if I change from FIFO to weighted average, it's a change in accounting policy. But if I change from SLM to WDV, it is not a change in accounting policy, it is a change in accounting estimate. Another RTP May 23 RTP question. Okay. Change from SLM to WDV, change of useful life of asset is not a change in accounting policy, it's a change in accounting estimate. Following, guys. Now we have learned what is accounting policy. Next they say how to select an accounting policy. They give two things, primary and secondary criteria. To select an accounting policy under primary, you have to do it in true and fair manner. In what manner, guys? True and fair way. In secondary, they give three things, prudence, materiality, substance over form. So to select an accounting policy, maybe theory question, give importance to prudence, materiality, substance over form. But examiner's favorite two questions in the standard only are these two. What we saw above is to understand. Examiner's favorite question is, when can you change an accounting policy? What to do if you change? You can change accounting policy only in these two cases. If there is change in law or statute, or you say change in accounting standard itself, or it leads to a better presentation or appropriate presentation of financial statements. This is the examiner's favorite question for 4 marks or 2 marks. Can I change every year? No. Can I change 10 times a year? No. Accounting estimate you can change how many times? Accounting policy, if you change, you have to give justification, and such a change only if there is change in law or statute or change in AS or for better presentation of FS. What to do if you change? You have to check, is it material? If it is not material, leave it, guys. But if it is material, disclose the impact in current year profits, disclose the impact in future profits. I am repeating, disclose impact in current year profits, disclose impact in future year profits. This is what they ask in exam. For example, they will tell closing stock, if I value as per FIFO is 30,000, if I value as per weighted average is 20,000, company has changed from FIFO to weighted average. Can they do that? What is the answer? They can change from FIFO to weighted average if it leads to a better presentation, and such change will increase my profit or decrease my profit. From FIFO to weighted average, increase or decrease my profit. Closing stock, come on guys, closing stock which was 30,000 will now become 20,000. So gross profit will reduce. So you have to say impact in current year profits is a reduction. Reduction of how much, guys? 10,000. Impact in current year profit is a reduction of 10,000 in my net profit. Future year, if you can compute future year impact, put that also over here. Are you following, guys? Clear? With this, we are done with AS1, and they sometimes ask basic foundation question. What are fundamental accounting assumptions? Going concern, consistency, accrual. Going concern, consistency, accrual. These things is like a default setting that you have to follow. Don't have to disclose anything about it. But only if you don't follow, guys. If I don't follow this, I have to disclose. Going concern, consistency and accrual. Following, guys. With this AS1 also is that we have AS2, AS3, AS10. AS10 generally comes in our exam. Now we will do one more standard, go to RTP, come back. Let's take AS2. AS2 is fairly simple, guys. This standard, if I have to break it down for exam viewpoint, tells what is, first you should know what is inventory. Once you know what is inventory, inventory is valued at cost or NRV, whichever is less. So the standard is all about finding out what is cost, finding out what is NRV, finding out what is definition of inventory. Okay, so we finished these three things. Standard is significantly done. Inventory, first to define inventory. Inventory is defined as an asset where they classify into three subpoints. Inventory is an asset held for use in production process. In other words, it's my raw materials. The definition is inventory is held for sale. If you want to start with definition, inventory is something that is held for sale, finished goods. Inventory is in the process of production of goods. They use the words in process of production of goods, which is work in progress, or held as materials or supplies to be consumed, which is raw materials. They generally don't ask us to define what is inventory. So in other words, inventory is an asset held for sale, which is generally ready for sale, finished goods, in the process of production of such good or it is what? Work in progress, held as materials or supplies to be consumed in the process of production of sale, which is raw materials. So you know what is an inventory. I'll give an example. You will understand the entire concept of inventory because this whole standard is about how to find cost, how to find NRV difference. So NRV, let me finish first. So what will be left is cost. Now you all know what's inventory, but this example I'm going to discuss now will finish the whole standard in the example itself. Let's say you have an old cycle. This is for NRV. In the house you have an old cycle. If you want to sell this, how much can you sell? Sir, nobody will buy, sir. Childhood cycle. No, I want to sell. Okay, you can sell it for 1000 rupees. But if I want to sell for 1000, I should do a small repair, remove the rusted part, change the tire if anything, seat, paint. That repair is going to cost me 300 rupees. Then I also have to find a broker, some commission I have to give, selling on OLX commission. So I'll incur another 50 rupees for broker. So I can sell for 1000 only if I incur a repair cost of 300 and brokerage of 50. So my NRV is 1000 minus 300 minus 50. Net to what you realize is 650. Correct? So 1000 is estimated selling price. I can sell for 1000 if minus cost of completion, cost necessary for completion, so I can sell for 1000, and 50 is cost necessary for sale, brokerage, selling expenses. Sir, why to do all this, sir? I will sell the cycle as it is for 500 rupees. I will sell the cycle as it is for 500. No repair, sir. Then cost of completion will be 0. Sir, no cost necessary to make the sale. Then this will also be 0. Then NRV will be equal to estimated selling price of 500. NRV, in other words, is equal to the market price or fair value if cost of completion is 0 and cost necessary to make sale is 0. Got the logic, guys? This is the formula we have in book. This is NRV. That's why NRV is not equal to market price. You can't use them interchangeably. NRV is basically market price or fair value reduced by cost of completion, cost necessary to make the sale. In other words, in India's language, market price, fair value is not the same. Leave that. We're not going to discuss much on that. So cost is done. So NRV is done. Now we're going to the concept of cost. Let's take an example. For the moment, assume, let's say we have all traveled to a factory of manufacturing lace chips. Okay. We are in lace chips manufacturing factory now. Now, let's imagine what happens here, because in this imagination, some standard will get over. First, the potato should reach my gate, otherwise I can't manufacture. So, for potato to reach my factory gate, what all expense I will incur? Transportation, insurance, then carriage, loading and unloading charges, driver beta, petrol, diesel, taxes I have to pay, toll charges, whatever expense I incur for the potatoes to reach my factory gate, that will be part of inventory cost. Clear, guys? Now, sir, you are paying for travel. Who will pay for the potatoes? So, even the cost of raw materials. So, what you pay for the potatoes plus transit, this lorry unloading, etc., tire puncture, all that expenses was necessary for potatoes to reach the gate. Everything will be added to my cost of inventory. Sir, on this I am paying GST, sir, on potatoes. Can I include it? No, I will not include it. If there is a credit, if input as credit is there, I will not include. If credit is not there, I will add. Trade discount, if any, will be reduced. Then after potatoes comes to my factory gate, what will I do next? Eat it? No. I will inspect it, check the quality and put it in my warehouse, cold storage. This cost also will be, we'll check about that. Then from cold storage, it goes to the factory. In the factory, these potatoes Are we going to sit down and remove the skin? No. Machine will take care of everything. Put them into plant and machinery. All this, then along with the potatoes, you have to add oil first, guys. Half the raw materials is half the, what to say, in lace packet, 40% is oil. Then yeah, you have to add, then you have to add those flavors, then you have to add masala, then add some cholesterol, add all of this. Preservatives we forgot. Add all of this. Then the chips are ready. Can I put my hand and eat? No. Those chips, even though it's ready, now there will always be a point where chips are being fried as part of machinery. Fried, don't think in your house I'm doing fried. Huge containers where it gets fried. Okay. Next, then it goes here. They will pack it in lace packet. They will pack it here. Then it goes to the godown from where it reaches our retail shops, distributors. Sir, what expense to capitalize? If you look at this, connect this with our example, connect this with our definition. Example, raw material is my potatoes. And I told the definition, third line says materials to be consumed in the process of production. Definition is my oil, air, flavors, whatever, the preservatives, all of that. Materials to be consumed. Then at any point of time, always there will be some lace chips which is being fried or which is kept over there before packing. That's my work in progress. Finally, lace chips is ready in the godown. That's my finished goods. So in this process, I have raw materials, work in progress, finished goods. Whatever expense is incurred till this lace packet comes out and goes into godown, finished good, until my finished goods is ready, this entire expense will be part of my inventory cost. That's all. Sometimes they tell, sir, storage cost, I'm confused. Storage cost to store the raw materials will be included. Storage cost after the finished goods are ready is not included. Now, admin overhead, sorry, selling overhead, when is it incurred? After FG is ready, so not included. Storage cost of the final godown, warehouse of lace pack is included? No, because this storage cost in godown is incurred after FG is ready. Sir, what about electricity in the building? Electricity will be included because it's in the warehouse. Sir, what about salary paid to employees in this factory? Will be included. What about inspection charges? Will be included. What about warehouse electricity bill? Will be included. Any normal loss here will be absorbed. Normal loss will be absorbed. Whatever happens until my FG is ready, everything else over here, everything over here is what, guys? Included. Sir, what about depreciation? What about rent for the factory? Included. What about depreciation on the plant and machinery? Included. Are you following, guys? Whatever is incurred after FG is ready, we will exclude. Now to come to exam points over here. So my exclusions are generally storage cost, selling overhead or admin overhead. Sir, factory is here, sir, in corporate office of lace. Director is sitting in AC room. That AC will include? No, that is admin expense. Then abnormal loss cannot be included. Only normal loss as part of inventory will be apportioned and included as part of cost. Abnormal loss will be excluded. Interest cost. Whether I will include interest cost? Sir, I took loan for manufacturing chips. The answer is, they say go and read AS 16. Beautiful concept. They say go and read AS 16. If the interest cost is necessary for the purpose of making chips, and if chips is a qualifying asset, then I will capitalize interest. Is chips a qualifying asset? Does it take substantial period of time to get ready? No. it can get ready in 10 minutes and we will eat in 2 minutes. So it doesn't take substantial period of time to get ready, guys. So it will not be capitalized. Sir, I am take manufacturing wine, sir, liquor manufacturing, wine takes 3 to 4 years. Then that interest will be capitalized because interest is incurred, borrowing cost is incurred to build an asset which is my inventory, and inventory is a qualifying asset because your inventory is taking time, in substantial period of time to get ready for not intended use to sale. Kasakra and building houses to sell, then that will be capitalized. Are you following us? Very, very important concept. They haven't tested this part in exam, where AS 16 is a beautiful standard. AS 16 can be combined with AS 11. We saw a question. AS 16 can also be combined with what? AS 2 and inventory they can ask. AS 16 is already combined with AS 10. That only is asset, qualifying asset. So AS 16 is not an independent standard. It has to be read with some other standard. Fine. Come back over here. So we saw what is the exclusion. The inclusion, the other cost until FG is ready, is classified into variable cost and fixed cost. So variable overhead and fixed cost, guys. Variable overhead, whatever cost is incurred, like costing, I will absorb using actual rate. Now actual output. So this is nothing but the actual rate using the quantity is actual output. I will divide by what is the total variable overhead, guys. Find out the total variable overhead. They will give POH etc. 10 lakhs divided by 1 lakh unit manufactured, 10 per unit. But fixed overhead, depreciation, rent, these things are fixed cost. You do total fixed cost divided by not actual output. You will take normal capacity. So irrespective of the actual output, you will divide by normal capacity. So if my fixed cost is, let's say, 15 lakhs, I plan to manufacture only 50,000 units. Irrespective of actual output, more or less, I will divide by 50. There is a beautiful logic as to why we divide by normal variable. We need 20 minutes for that. I am not spending that here. Exam, variable cost, actual output, fixed cost, normal capacity. That's it. This is the cost. Now we know what is included and what is excluded. Following, guys. With this AS2, core concepts comes to an end. So you know what's cost, what's NRV. Then what are the methods of valuing inventory? FIFO, weighted average. We also have specific identification method, standard cost method, retail selling price method, methods of inventory valuation. And then you have the sums. Remember, normal loss. For example, if my total cost is 12 lakhs, guys. Okay. I purchased 1000 units. I lost 100 units. So I received only 900 units. In this loss of 100, 70 is normal loss, 30 is abnormal loss. I will divide by what? I will divide by 930. You can reduce only normal loss, not abnormal loss. This only is called absorption method. Are you following, guys? So then if you divide by this, how much you are getting? 12 lakhs by 930. 12 lakhs by 930, how? 1000. This 1290 into 900 will be my cost of inventory. What is the loss, guys? This will be abnormal loss debited to P&L and credited to my trading account. Abnormal loss comes in credit of trading, debit of P&L. That's another beautiful concept. Following, guys. With this, we are done with AS2. Since we are discussing a similar example, before I go to RTP, I am not doing the entire AS10, but I am doing the core concept of AS10, what comes in exam. Okay. Just now you learn that in AS2, until finished good is ready, you will capitalize everything. In AS10, until the PPE is ready for use, everything will be capitalized. Okay. That's it. Now I'm going to tell you a few common points. Let's say you're buying AC for the house. You went to showroom, purchased the AC. Purchase price will be capitalized. Then you went to showroom. After going to showroom, from the showroom, what you did in the showroom, let's say you paid some taxes. Credit available, reduce it, don't add it. That AC had to come to my house. Delivery charges will be capitalized. AC had to be installed in the house. That installation charges will be capitalized. I had to buy additional pipe for keeping the AC in the house. That will be capitalized. To keep the AC in the house, the wall didn't have a hole. So I had to make a hole, drill and keep the AC. That is called cost of site preparation. That will be capitalized. So basically your purchase price, cost of site preparation. Then somebody is coming and telling my house whether AC will fix for you, window AC good or split AC good, which 10 is best for your room. Technical expertise. One survey engineer will come, the AC mechanic will tell, sir, for your house, for him he is taking 500 rupees consultation charge. That is called, so your purchase price, cost of site preparation, technical surveyor expense, all these will be capitalized. Employee cost for construction of asset will be capitalized. Are you following, guys? What will not be capitalized as per standard? All logic, sometimes selling overhead, marketing expense will not be capitalized. Sometimes they will do opening facility, Guhapravesam, that they will do that launching of facility will not be capitalized. Shifting, sir, I am shifting my classroom from one location to another location. That will not be capitalized. Think logically, guys. All these are happening after asset is ready. Marketing cost, training the staff will not be capitalized. Are you following? Clear, guys? Here one important point. They say, what about testing cost? This is a good question. Testing cost until the asset is again ready for use. Sir, I don't know if the asset will work. For example, if you go to amusement park, you have this roller coaster. Okay, now don't go, guys, exam, but roller coaster is ready. But before humans go in, we will test. Is it working properly? We'll put weight, we'll do all test. Test until asset is ready, until I can commercially start making revenue. That test will be capitalized. But now once it's ready for use, even though it's ready for use, in a day roller coaster can go 100 times, assume. But I don't want to risk immediately. So initial first 6 months, I will use the roller coaster only for 40 rides in a day. So they will say operating at less than full capacity. Because I'm operating at 40 rides, I have a loss. Can I capitalize this loss? No. You cannot capitalize. This fully will be debited to my P&L. Other losses like initial operating losses will not be capitalized. So the standard mainly focuses about what you can capitalize, what you cannot capitalize. Are you following, guys? So over here, another important point. So now you know until asset is ready for use, everything will be capitalized. Others will not be capitalized. Okay. Here there is another important point called decommissioning expenses or restructuring. I installed roller coaster today, but government told close the amusement park in 25 years. So after 25 years, I have to remove the roller coaster. To remove the roller coaster, for dismantling roller coaster, I have to incur, let's say, 1 crore, which I am going to incur after. That I will capitalize today at present value. If I am going to incur 1 crore for removing roller coaster after 25 years, present value of this 1 crore will be capitalized today. That's called decommissioning liabilities. Are you following? That's the new addition to AS 10. What is included? What is excluded? Now we will go to RTP, but before that, what is important in AS 10 in my view for exam? There are only 2 type of sums that can come. We are going exam here. 2 type of sums for November 23. This video discussion is for November 23. After analyzing past exam questions, what is important is what I am discussing. 2 type of questions. We are going to do both, one RTP, one I am going to do it now. They will give a list of a few items in paragraph or table and ask you what to capitalize, what not to capitalize. That's what I discussed now. We discussed, they will tell inclusion, exclusion. We are going to do an RTP sum. The second type of sum, my feeling for November 23, is a method in depreciation. Apart from SLM, WDV, we have a new method in AS10, never tested, called component method of depreciation. You won't even know it exists because it's not there in study mat sum. It's in RTP, and that RTP is removed from ICAI website. So unless you learn somewhere, you will not know this. Simple, guys, very easy. They will say land and building has, let's say, 4 components. Lift, then they will say building, land, and let's say furniture, and they will say lift is 10 lakhs, building is 50 lakhs, land is 1 crore, furniture fitting 5 lakhs. Normally we total everything as part of land and building. Total here will be 1.5, 1.65 crores. If you take a car, for example, let's say you buy a car, premium BMW car for 1.65 crores. We depreciate the entire car gets depreciated for 10 years. But logically that's not right, because the engine of the car has a different useful life. Tire has a different useful life. Let's say the seat has a different useful life. Same way in land and building, lift has a different useful life. Building has a different useful life. Land has a different useful life. Furniture fitting has a different useful life. Component method says split the asset into different useful lives. No, or meaning, in other words, whichever component of the asset has a different useful life, split them into components. Split them into components. So, which in the whole asset, each component will have a different useful life. Split them into different components. And then write the different useful life for each component. Lift life is 10 years, building life is 50 years, land life is 100 years, furniture fitting life is, let's say, 2 years. Now how to compute depreciation? Lift 10 lakhs divided by 10 years, 1 lakh. Building 50 lakhs divided by 50, how much, guys? 1 lakh? 1 lakh. Land 1 crore divided by 100, nothing. You don't depreciate land. That's another common mistake we do. And further fitting 5 lakhs divided by 2 years, 2.50 lakhs. So my depreciation will be basically the split up of the component divided by its respective useful life, and then you get respective depreciation, and total depreciation for the asset will be 4.50 lakhs. Instead of dividing whole land and building 1.65 crores divided by 50 years and doing a wrong and not true and fair, this is split into components and depreciate. Are you following, guys? This is part of AS10, another important part, component part. So only you can expect, see, usually in AS10, so far they asked only this. We're going to do RTP sum. This component method may come because it's just another different sum that may come. Are you following, guys? So AS10 also, we finished the core of AS10, what's included, what's excluded. Now we have only one standard left, AS3, and in AS10 a few concepts. We will go there after we finish our RTP, because more sums we do, we get confidence, use of the session. So let's go quickly to our RTP. I will download the RTP. Yes, we have it ready, guys. Okay, let's go to the AS questions, guys. We will try to do one more RTP also, May 23 if time permits. Okay. So first, AS1. I'm going to be quick, guys. No time for you to read and for me to explain. I will read, I will explain. You have to be faster than me. ABC was making provision for non-moving inventories for last 12 months. Company wants to provide based on technical evaluation during the year. Total value of inventory is 100 lakhs. Provision based on 12 months. What they used to do is 3.5. Now based on technical evaluation is 2.5 lakhs. Is this change in accounting policy? Change from, we are not doing FIFO weighted average. I am changing from a 12-month issue to a technical evaluation. Is this change in accounting policy? No. This is basically change in accounting. Estimate is being changed. Can the company change method of provision? Yes. Provision and estimate. Provision is an estimate which will change based on facts and circumstances. Make the change. Whatever is the difference. Earlier, provision was 3.5. Now provision is 2.5. Quickly, because of this, net profit will increase or decrease up. Net profit will increase. This impact you have to disclose in financial statement. That's it. We're done with the question. Are you following, guys? Next to question 2. Alpha Limited. Earlier, instead of milk, there used to be something else. They used to use alcohol in the exam. Now ICAI has amended to milk, guys. Okay. Alpha Limited sells flavored milk to customer. Before the question was Alpha Limited used to sell alcohol to customers. Some customers consume milk in the shop run by Alpha Limited. While leaving the shop, consumers leave the empty bottles in the shop. And the company takes possession of these empty bottles. I'm talking about milk bottle, guys. Okay. The company has laid down a detailed internal record procedure for accounting of these bottles. What they are doing with the empty bottles? They are also selling the empty bottle. Waste, no, why to throw and break them? They are selling the empty bottles. Keeping in view, is this inventory as per AS2? Now, is this an asset? Yes. Is this a good, finished good which is ready? Am I selling? Yes. Am I earning money? So, it's an asset which I am selling, earning future economic benefits. Selling the asset, earning future economic benefits, plus I have detailed internal record procedure. So, it's an inventory as per AS2. Old question, they changed to milk, that's all. It's an inventory bottle. So, if so, whether inventory of empty bottles existing as a balance sheet date is considered as inventory, yes, 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 and treated as scrap, or to be treated as scrap corresponding to other income. No, it is treated as inventory. Whatever income comes, you will put it in the revenue. Okay. Next, property, plant, equipment. I told you, exam question is like this. They will either give a paragraph, previous RTPs has paragraph, we will see that, or they will give like this, what's included, what's excluded, AS10. First, 25 lakhs will I include? Yes. Sir, tax, they have not given whether it's GST credit available or not. If question is silent, you don't tell, input tax credit available, I will reduce. Sir, even if it's available, how much is tax? Sir, I know, sir, 18%. I will do into 18 by 1 minute, I will do reverse working. No. Don't do overthinking, guys. Not in exam. In life itself, overthinking is dangerous. What is given? Straight ball. Play for the straight ball. Don't try to do sweep of straight ball and get bold. So, take 25 lakhs, include. Installation and delivery, include. Cost of site preparation, include. Consultant used, I told you, include. Interest paid for supplier for deferred credit. I delayed the payment. For that, I had to pay extra interest. Deferred credit means I delayed, guys. So, I had to pay interest. Will I include? No. That means don't reduce it. Don't consider it. Add only these things. But this interest can be capitalized if AS16 allows for that. But since question is silent, you don't capitalize. That's it. Estimated dismantling cost to be incurred after 7 years. Include, I told you, dismantling cost. Sir, present value, no sir. This is the present value. What's given is the present value. If they give discount rate, then you do present value. That we know. FM, we are experts. Foundation time value of money also, we are experts. How to discount it. Operating loss before commercial production. Ignore. So, whatever is not striked, all these things will be included, which is my cost of inventory. Sorry, cost of PPE, guys. Are you following? Initial operating loss before No, before that is testing. This is operating loss. Before commercial production will be excluded. Are you following, guys? Operating loss is a revenue expense. Okay, done, guys. Okay. We will try to do one more sum in this template from a different RTP also. Are you following, guys? Understanding what's included? Presentation should be particulars, amount, remarks, reason, or you do particulars, amount, give note 1, 2, 3, 4, 5 like tax, explain why each thing is included and excluded. If you don't do that, if it's a 5-mark question, don't expect more than 2. Otherwise, I will simply add why I am adding, why I am not adding, I should explain. Fine. AS 11, they're asking, oh, AS 11 here, it's there, borrowing cost is there. Next, AS 11, how will you classify the following? Monetary or non-monetary? Trade first, reverse, fixed assets, non-monetary. Non-monetary, guys. Investments, non-monetary. Trade receivables, monetary. Because fixed, generally, not always, generally non-monetary items have accounting standards. Investments, fixed asset, inventory has an accounting standard because it is not realizable in fixed amount, high risk. Share capital, what is share capital, guys? Share capital doesn't have an accounting standard, but balance sheet, whatever is share capital, it keeps fluctuating. What you realize is not fixed, so it is non-monetary. Are you following, guys? Clear? Okay. That's it. Last 2 questions. This RTP gets over. I think we have time to do one more RTP. Let's do that, guys. AS 12, government grant. S Limited received grant of 18 crores from government for setting up factory in a backward area. Out of this grant, they distributed 12 crores as dividend. No, they can't do that. What grant is this? Grant in the nature for setting up a factory in backward area. So what is this? Grant in nature of specific fixed assets. No. How can you say yes for that? If recording students, if you're telling me, sir, it's yes. If you told, sir, you're wrong, you're right. This is for setting up factory in backward area. This is grant in the nature of promoter's contribution. Money for setting up business. Initial investment is grant in the nature of promoter's contribution. Entry is bank account debit to capital reserve for how much, guys? 18 crores. You cannot distribute dividend. Next, they also received land free of cost from state government, but it is not recorded at all in the books. Can they do that? No. They have to pass bank account debit to capital reserve at what price? Nominal value. What price, guys? Nominal value. Because they did not record, no money has been sent. It is non-monetary grant free of cost. Fine. Last question in our RTP now. I told you, we discussed a similar sum that AS 16 clubbed with AS 11. Last 2 RTPs, November 23 RTP and May 23 RTP has a similar question. Not tested in exam even once. That means this question is waiting to come to the exam question paper and trouble you guys, but not for us. Okay. Look at the question, guys. Let me give the facts. Okay. A Limited took a loan of $20,000 at the beginning of the financial year for a specific loan at an interest rate of 6%, payable annually. On the date of taking, so how much loan they have taken, you can compute $20,000 into, they have not given dollar rate, hold on, dollar rate is 6%. On the date of taking loan, exchange rate was 48. When they are repaying, dollar rate is 50. Currently, exchange rate is, Indian rate of interest is 11%. Facts are clear. What is foreign? What is India? What is the rate? Quickly, I will go to solution. So, it's easier. We can be fast over there. Let me go to the solution, guys. One second. I'm just reopening that. We'll also download, by the time you try to solve it if you have the question, I'll try to download the next RTP. So we can easily do 2 RTPs, guys. That's good. Yeah. So last AS question, basically it's the last question, correct? That's it. Last question of RTP. Both RTPs, last question. Okay. Now, I'll explain with the solution and make you understand. If you took interest in foreign currency loan, it would have been 20,000 into 50. Because you are paying it when the rate became 50 into 6%, 60,000. If you took interest in India, 20,000 into 48, correct? Because in India, you would have taken it 48 into 11%, 1,05,000. Only look at what I am highlighting, guys. Only look at what I am highlighting. So, if loan was taken in India, your interest is 1,05,000. If loan is taken abroad, interest is 60,000. Look at the computation. There it's 50 because interest is paid after 1 year. In India, it's at the time when you take the loan, 48. So, I am happy. If you take abroad, you have to pay only 60,000. I am happy. India, 1,05,000. Stupid fellow, you took in India. Look at me. I saved by going abroad. How much I saved? 45,000, which is 60,000 and 1,05,000. Correct. I saved how much? 45,600. I'm very happy. Yes, I saved 45,600. Now I'm telling you saved on interest. What about principal? So principal 48 became 50. So you have to pay extra 2 into dollars of 20,000. You get how much? 40,000. So I have a loss of 40,000, but I have a savings of 45. So this entire loss will be treated as what, guys? Interest. In other words, loss up to the savings of 45,600 will be treated as interest. So if you see here, the difference saving is 45,600. The entire exchange difference of 40,000 will be considered as borrowing cost. My total borrowing cost will now be Indian plus that loss, the loss plus actual. What is the actual interest? 60,000. What is the loss? 40,000. So total 1 lakh will be treated as interest. This 1 lakh can go to up to how much? 1,05,600. I still have a buffer up to 1,05,600. Are you following, guys? This is an AS 11 they say, and AS 16. Borrowing cost is foreign exchange difference. The wordings. Let's look at this, guys. What is exchange difference here? 40,000. The wording says exchange difference on foreign currency borrowings to the extent attributable towards interest. Following, guys. This is our November 23 RTP. Let's go to another RTP, guys. November 23 is May 23. We will do it quickly. We are going to do one more sum in the same forex, guys. This is May 23 RTP, guys. Okay. Let's go to the RTP questions again. Okay. In the books of Rani Limited, closing value FIFO amounts to 1,75,000. The company decides to change from FIFO to weighted average. So if you do on the base of weighted average, it is how much? 1 lakh NRV is 2,07,000. First, what will be inventory as per my books? Its cost or NRV, whichever is lower. What's my cost as per weighted average? 1,59,000. What's my NRV? 2,07,000. So I will record at 1,59,000. Super. I'm recording it how much, guys? 1,59,000. But now I'm changing from 1,75,000 to 1,59,000. How much reduction in inventory? 16,000. So this full 16,000 is the reduction in profit, because closing stock is reducing from 1,75,000 to 1,59,000. So this 1,69,000 is reduction in profit. Disclose the impact that because of the change there is reduction in profit. AS 1 is done. Are you following, guys? Now go to AS 2. An enterprise ordered 20,000 kg of certain material at 1,110. So I will do 20,000 into 1,110. The purchase price includes 12 rupees per GST. Reduce that. So effective cost will be 20,000 into how much, guys? 20,000 into 1,110 minus 12, 98 after reducing GST. Because in respect of which full ITC is available. Full ITC is available. Freight included how much? 1,17,600. I will add it. I will add. Normal transit losses 2%, but you received only 19,500. So if I have to write this down, I ordered how much, guys? 20,000. Normal loss is 2%. What is 2% of 20,000? My loss should be 400. I should have received 19,000, but I received only 19,500. So abnormal loss is 100. So I will divide until the end of the sum at 19,600. What is my cost total, guys? Can you do a quick computation with me? 20,000 into 98. How much is that? 19,60,000 plus freight of 1,17,600. How much? 20,77,600 divided by actual 19,600, reducing normal loss per unit will be 106. Now what is the closing stock? They said we consumed 18,000. We consumed 18,000. So I received 19,500. I consumed 18,000. So my closing stock is 1,500. So in this 19,600, if I have to split, how much is consumed? So closing stock will be abnormal losses, this into 106, this into 106, this into 106. Abnormal loss, closing stock, purchase. I mean, this will be the whatever is purchased, purchase cost. Following, guys. So let's go check if the answer is AS2. It should be 106. Just cross checking for our satisfaction, guys. Fine. We got the answer of 106, and this is the breakup that they did. Purchase cost of an abnormal loss. Are you following, guys? That's about it. Now next question. I think switching like this will be hard. I'll just do one thing. So we can keep answer one place and questions one place. Fine. We're done with AS1 and AS2. Let's quickly go to AS10. This also is easy, guys. A Star Limited purchased machine for 6,80,000 inclusive of GST. Reduce this. Then company incurred following expense. Cost of site preparation include. Total labor charges 56,000. but only 200 out of the total 500 hours was used for the installation. So you will include what? Proportionately 56,000 into 2 by 5 into 200 by 500. Is that what they do? Yes. Look at the answer. 56 into 26 by 5, 22,400. Are you following, guys? Okay. Next, come down. Spare parts, tools and consumables consumed in installation. Yes. Coming to spare parts, let me talk about a concept called machinery spares. If a spare is specifically used for one asset, sir, I bought one spare part, only this asset, BMW car tire, special edition, I can use only for this car, then it becomes an asset, AS 10. Sir, car tire, I can use for any car. It's a spare, nut and bolt, I can use for any asset in the factory. It becomes inventory as per AS 2. Spare parts specifically for asset is a AS 10. Otherwise, here they have not given anything. We are taking it as AS 10. Total salary of supervisor is 26,000, but only he spent how much? 25%. So into 25% will be included. Next, total technical expense is how much? 34,000. How much relates to installation of plant? 1/10. So into 1 by 10. How much? 3,400 only will be included. Are you following, guys? Next, test run and experimental production expense. How much? 18,000 will be included. Consulting charges to architect plant for setup 11,000 will be included. Depreciation will be included. I told you anything for the asset used on assets used for installation will be included. We will go check the answer. Included 110, 25%. Are you following, guys? Next, the machine was ready for use on 15th Jan, but used from 1st Feb. I don't care. It's used on 1st Jan. Due to this delay, 8,900 was incurred. Will I include that? No, I will not include that. So that will be ignored. It will be ignored. Here they reduced what? GST. They reduced GST. Clear, guys? That's it. AS 10 is done. Component method also we did. Now again we have AS 11. Same sum. We are doing third time this sum. That means how important is this? Correct? We will come back to this AS 12 and AS 16 and that's it. Yeah. So let's go in the order itself. Quickly read the question. Take a moment. Read the question. See how fast you can do it. Again, I'll discuss the answer, guys. So if you look at this, guys, ABC Limited borrowed how much? 15 lakhs at the beginning of the year. When the rate is LIBOR plus 1%. What is LIBOR? International rate. Leave it. He gave LIBOR as 1%. So in abroad, my rate effectively comes to 5%. That's it. Okay. When I borrowed, the dollar rate is 72. Later it became 76. If you borrowed in India, the rate would have been 9.5. Let's do the third time we are doing this, guys. You should be having the control now. Look at this solution I'm showing you. You can try if you want to try, pause and try, then come back to solution. Recording students now or live students. Many of you are watching live now on YouTube live. You can still pause, try and do the sum if you want to try it by yourself. Interest for the period. Look at this. If you borrowed in abroad $15 lakh into 5%, LIBOR plus 4 into 76. Why 76? Interest is paid after 1 year. My interest is 57 lakhs. Increase in liability. Before that, interest if I paid in India would have been 15 lakhs into 72 into 9.5, which is 102.6. So if I paid in India, it would have been 102.6 lakhs. Paying abroad, it is 57. So I feel happy that I have saved so much interest. But my liability principal, 15 lakhs into 4, 60 lakhs increased. So I have a loss of 60 lakhs. What is my savings in interest? Look at this. 102.6 minus 57. How much? 45 point. So, my loss of 60 up to the extent of this savings will be treated as interest 45.6. Beyond this 60 minus 45.6, how much guys? 14.4 will be treated as forex loss as per AS 11. Are you following guys? So if you come to conclusion, if you see here, how beautifully they have summarized. 14.4 lakhs is treated as per loss as per AS 11. Interest will be 102, which is original interest of 57 plus the savings of up to 45. Both are saved. So 102, adding both as per AS 16. Are you following guys? Last sum, it was different. We didn't have loss. Now you have a loss. Are you following guys? Are you understanding guys? Everybody got it? So mark this sum as important, or this concept. Both the RTPs, if you do, it's enough. Okay. Next. Last 3 sums guys. Follow. Hygiene Limited received a grant of 50 lakhs from state government towards installation of pollution control machinery on fulfillment of certain conditions. What type of grant is this? Specific fixed asset, for buying asset. They failed to comply with the conditions, so they had to refund the money after 10 years. The company debited the said amount to its machinery account in 2022 on payment of the same. It also reworked the depreciation for the machinery from the date of purchase and passed necessary adjustment entry in 2022 to incorporate the retrospective impact of the same. Is it correct? Can they do retrospective effect? No. What they are saying, when they purchase the machinery, purchased asset value itself is not given. So basically when they receive the grant, they credited asset here. They reduce the asset, or if they credited deferred income, whatever, I don't care. Question is not clear. But they are saying because of refund, they retrospectively change the depreciation of the past as if they never received grant. Can I do that? No. No retrospective allowed for depreciation. Accounting treatment is not correct. Are you following guys? Next question 13. Gautam, study mat question, but follow. Gautam Limited invested in shares of another company with the intention to hold the share short term period. Intention is what? Short term period. He purchased at how much? 4 lakh 25. Also purchased gold and silver for 8 lakhs and 3 lakh 50 on 31st March 2019, long back. The market value on 31st March of investment is as follows. Shares 3 lakh 50, gold 1025, silver 5 lakh 10. At what price should I take? For shares is current investment, intention is short term. So cost is how much? 4 lakh 25,000 or NRV 3 lakh 50, whichever is lower. Correct? For gold and silver, should I take fair value or cost? So they have not given current or non-current. Hello, generally gold, silver, do you buy for selling? We buy for long term. So since it is long term, value at cost, which is 8 lakh and 3 lakh 50. So answer for valuation will be shares at 3 lakh 50, write off the loss, gold at 8 lakh, silver at 3 lakh 50. Let's go and check our answer. That's how it will be guys. 3 lakh in shares, gold, silver, will show 3 lakh 50, 8 lakh and 3 lakh 50,000. Are you following guys? Sorry, this question is here. Yeah. Now they are asking, is it a qualifying asset or not qualifying asset, and what you have to do. Are you following guys? Okay. Let's go through the question. Last sum, we have done 2 RTPs. Okay. Expert Limited issued 12% secured debentures of 100 lakhs on 1st June. Money of debentures used as follows. Construction of factory building 40, working capital, I don't even have to read a question, not a qualifying asset. Purchase of machinery, furniture, truck. 3 assets. Now, interest on debentures for the year was paid by the company. Look at this. During the year, company invested idle funds 5 lakhs and earned an interest of 50,000. What's my interest, guys, totally for debentures? 100 lakhs into 12 by 100 into how much, guys? How many months? Not 12 by 12. Issued on which day? 1st June. So into 10 by 12. Are you following, guys? Otherwise, here we make a common mistake of taking 12 by 12. So what is my interest coming to? 100 lakhs into 12% into 10 by 12. Are you following, guys? Clear? 1 lakh, just check. Is it 1 lakh? 100 lakhs into 12 by 100 into 10 by 12. Quickly compute, guys. How much? 10 lakhs. So, getting interest of 10 lakhs. But you have earned idle fund of 5. So, this 5 lakhs will be reduced. So, balance interest is 5 lakhs. This 5 lakh only I have to split as what, guys? How much to be capitalized and how much is debited to my P&L account. Are you following? Clear, guys? Now come back here. During their company invested this. Construction of factory building was not completed. It's expected it will take another 6 months. So I'll treat as what, guys? Qualifying asset. In March 2022, machinery was installed and ready for intended use. It's ready and intended use. So not a qualifying asset. Furniture was put to use. So not a qualifying asset. Truck is going to be received in April. That means hardly substantial period of time. So it's not a qualifying asset. That's all our answer will be. Simple. Qualifying asset and not a qualifying asset. Are you following, guys? Clear? So now temporary income is 5 lakhs or 50,000. Sorry guys, you should have, yeah, one small correction over here. Yeah, I just removed the principal. So our interest is how much? 10 lakhs. The temporary out of idle fund of 5 lakhs interest is how much? 50,000. So from this we will reduce 50,000, we will get 9.50 lakhs. Anybody watching live or recording, if you figure this out while I was doing, good, great job. Now come back over here. 9 lakh 50 after reducing this will be apportioned based on the values over here, which is interest to be capitalized, interest to be debited. How I will apportion? Apportion in the ratio of 40, 35, 15, 2 and 13. Now here check the total. How much is the total? 100. It matches, so it's okay. If it's less than 100, 80, it's okay. Apportion in the same ratio. If this is more than 100, you can't use apportion. You have to apply interest percentage. Because if you apportion, if this total is 130, if you apply interest percentage of, if you do apportioning, then the value may go higher. See, if the whole thing is 130, you should be careful to apportion only the interest of 9.50 lakhs. If you apply interest rate on this, then the interest will become more than 9.5 lakhs. Okay. So that's about it. We apportion, RTP comes to an end. We did 2 RTPs, guys, May and November RTP. AS10, we covered all the key concepts, what's included and what's excluded, and component method of depreciation. Now, lastly, AS3 for just 5-10 minutes. AS3, more than asking in a separate question in accounting standards, it comes as a separate module 2, financial statement chapter, preparation of cash flow statements. Basically, what you should learn here is, first be clear about definition of operating, investing, financing. Operating is our day-to-day activities. Like for example, for a bank, interest is operating. But for other company, interest is not operating. Investing is basically wherever you are investing into assets and earning return, like investing in plant and machinery, buying and selling. Financing is for my needs, financial needs, share capital and any kind of debt will be considered here. Then cash flow will be prepared using direct or indirect. Now, very simple thing. I know you will solve the sum, you know to do it. Now, we are going to focus on one core concept over here which students miss. Remember, here in both the methods, students get confused. So loss on sale, profit on sale. Basically, cash flow is a cash account, opening balance, closing balance, transactions converted into a statement where you will do all the transactions over here, then add the opening balance, you have to get what? Closing balance. So remember, in cash flow, write only add or less, especially in investing and financing activities. Profit on sale of asset, loss on this, depreciation will not come. In investing and financing, only cash inflow and outflow will come here. Only those transactions. Profit on sale, I don't care. That is taken care only in operating. That too, operating, if it's a direct method, ignore all the profit loss given in question. Only in indirect method, we add back what, guys? Depreciation. I'll tell logic for that. It's a simple logic. If my sales is 100, purchase is 50, if gross profit is 50, assuming everything is cash, everything is cash, what's my cash in hand? 50. Because I sold for 100, received 100. Purchase for 50, paid 50. My GP is 50, so cash in hand is 50. Net profit, assume all expenses comes to 20. Net profit is 30. What is my cash in hand? 30. Assuming everything here is cash. So I received 100, paid 50, left over with 50, paid expense of 20. So I have net profit of 30, which is cash in hand is 30. Following, guys. Now net profit is equal to cash in hand, but reality it won't happen. I might have depreciation 10. So my net profit instead of 30 will be 20. So if net profit is 20, but still my cash in hand will be 30. Because if everything else is cash except depreciation, this is not a cash expense. So cash in hand is still 30. That's why when I start with net profit of 20, I add back 10, make it 30. From net profit, find cash in hand. Like that other transaction, profit on sale of assets, I will write here. I will reduce it because it has to go to investing, and here profit on sale is not the cash inflow because 100 asset is sold for 120. Profit will be 20. But cash inflow is 120. That's why what we do in operating activities, I reduce that profit on sale 20 and investing, I add back 120 because this is the cash inflow, this is profit. Remove the non-cash transaction. Are you following, guys? We do it like this. And lastly, in cash flow, where students get stuck, change in working capital in operating activities. There's a formula. Asset increase means do this. Liability decrease means reduce cash. Logic. If creditors, current year, previous year. If current year is 100, previous year is, let's say, 150. Creditors 150 became 100 means I paid creditors. So creditors reduced. So I will reduce cash. Loan 50, 70, or let's say 80 and 70. 70 loan became 80. That means I received cash inflow. Are you following, guys? Same for assets. If I have trade receivables, 100, 70. Trade receivables reduced. That means I received cash. Are you following? If I take stock 100 became 120. If stock is increasing, I added, I purchased. So cash outflow. That's the logic. Remember one, other becomes easy. Able to get the logic in cash flow, in change in working capital, guys. And one last thing in cash flow, exam viewpoint, current year and previous year, be careful. Sometimes they will give reverse. He will give previous year and current year. Students make the mistake over here also. Ensure you don't make mistake over here. Look at the dates properly. So now we will be concluding our discussion. We discussed all the AS key areas. We discussed 2 RTPs, did the sums for all the AS we have. So in exam, whatever time you have left, just give your best. Don't think about anything else. Whatever time, whenever you're watching the video, go revise, give your best. Write for 100 marks. And my only advice from here till exam will be, read the question properly. Read it twice. Don't make mistake because you read the question wrong. Read it properly. Write for 100 marks. Write it neatly. and then give your best and then leave the rest to the power out beyond us. So thank you guys. We are done with our AS Revision 2 RTPs. Thank you.